Welcome to ForexTV.com. It's Tuesday, January 29th. I'm Remy Huki for your New York Forex Market Buzz. In New York afternoon trade as of 12:30 p.m. Eastern Time, Euro dollar is at 1.4765. Sterling dollar is trading at 1.9854, while dollar yen is around 107 yen. The market awaits tomorrow's FOMC rate announcement due at 2:15 p.m. Eastern Time. We had a slew of U.S. data out this morning, and starting out with the good news, durable goods rose 5.2% in December. Core orders came in higher at 4.4% month over month, and for November, durable goods climbed 0.5%, upwardly revised from the 0.1% decline. Meanwhile, the S&P's Case-Shiller Home Price Index fell to a record 2.1% in November. For the past 3 months, prices fell 16.2% at an annual rate. And last but not least, the Conference Board's U.S. Consumer Confidence Index fell in January to 87.9 from a revised 90.6 in December. Joining me this afternoon is John McCarthy, Director of Foreign Exchange at ING. Good afternoon, John.
Good afternoon.
Thanks for joining us today.
Okay.
Well, the positive durable goods data helped the greenback regain some ground versus the euro, and as the equity market manages to hold on to some strength, the yen and Swiss franc have pulled back slightly. But John, ahead of tomorrow's Fed decision, the dollar is mostly lower against the G10 currencies. So do you see tomorrow's rate decision supporting the euro dollar?
Well, it all depends on what that decision is, to be honest with you. After last week's very sharp sell-off in the equity market early in the week due to an exogenous occurrence, it is now possible that the Fed emergency rate cut may be tempered a bit by this week's action. The market seems to be vacillating between 25 or 50 basis points. I think if you get 25 basis points or, in fact, no rate change, you would see the equity markets tumble, and you'd see the dollar probably rally along with the Swiss franc and the Japanese yen. 50 basis point rate cut probably leaves us with the dollar under a little bit of pressure against the euro and the European currencies, but a lot depends on what the Fed says after the announcement. Again, the equity market turbulence last week and the resultant Fed funds and discount rate cut was perhaps due to something that may not wish to be taken into consideration for the Fed in the medium term. So we have to see what they say. And then furthermore, we do have non-farm payrolls out on Friday, which could also give us a better indication of the relative health of the U.S. economy. So a great deal depends on what the Fed does and obviously what the Fed says, and that'll determine the future course of the euro dollar and Japanese yen.
Now that we've covered euro dollar, let's move on to the Japanese yen. Given that markets are less certain about the rate decision, as you mentioned, how will equity price action weigh on dollar yen and the yen crosses tomorrow?
Well, if the rate announcement is disappointing, if they don't change rates at all or lower by 25 basis points, you could see a knee-jerk reaction where the equity markets fall. That would probably trigger a lower dollar yen and a lower crosses against the yen. The yen would strengthen relative to everything else, as say with the Swiss franc. The dollar would probably gain a bit as well. So any equity market turmoil, any equity market pressure generally will translate into a stronger yen and a stronger Swiss franc.
Okay, let's move on to the Canadian dollar.